Hey, what's happening, guys? Dan Darrow here with another Options in Play video update. Gonna keep a good thing rolling. It's the middle of earnings season, so you want to hear about earnings. So this video is going to talk about earnings on the radar for next week, so the upcoming week, the week of 10/26. This past week, so the last 5 days started to get really busy, and the next 2 weeks are going to be just absolutely jam-packed with names, big names reporting. So without further ado, Monday before the open, Halliburton. So the chart doesn't look great. Traders aren't really showing the oil field service names any love at the moment. Schlumberger was Friday, so today, and the number was okay for Schlumberger. Tried to get back above 60, but now it's kind of back down. Hanging underneath the kind of a key level. Halliburton typically performs kind of in line with Schlumberger. Because Schlumberger is already out, remove some of the uncertainty there, and won't touch Halliburton. But thinking that it doesn't really, it shouldn't have too much of impact on Schlumberger, and I guess that's what I'm most concerned about at this point. I'd like to see Schlumberger start to put together some momentum here back on the north, back on the upside. So I don't think Halliburton should have too big of an impact, but those two do tend to trade together, so I'll have to keep an eye out on that one. Also, Monday morning is Lennox. I wrote about this in last night's letter, and interesting one because they're a supplier to the residential and commercial real estate markets. Spec short, right? Because it's not kind of a tough option name, not very liquid. Options are a little bit more thinly traded, but with so many names in that sector acting just terrible, this is leaning on long-term support, and it seems that if the numbers are in line with what peers are reporting, there could be a really substantial breakdown. Looking at the options, the straddle's about 15 points. But you can see, a really well-defined gap and even like further room down just to get to any significant area of support once it loses this 190 real like well-defined area. So that's Monday before the open. Also, Tuesday is a who's who of industrials. You have 3M, you have CAT, you have Lockheed Martin, right, and UTX. So just a powerhouse of big industrials there. Of that group, I'd say that 3M probably looks the most interesting. You can see it hasn't rebounded much, coming off quarter missed. Well, the guidance was weak, knocked it, missed this quarter, had a little bit of rebound, closed the gap, and now it's right back down to 200, right? So it hasn't really rebounded much off that 52-week low. And you can see technically, some room underneath that level if it were to miss again. It's probably going to have a lot of similar issues from tariffs, inflation, softening demand, right? As a lot of or some of the other industrials that have reported up until this point. Last quarter wasn't particularly great. Stock's not cheap. Straddle on this one is pricing in about 8.5 points. But if you get a technical breakdown here, the move really could be quite a bit more than that, right? Also on Tuesday morning, Biogen. So one of the first big biotechs to go. This one's been pretty much range bound since the last reported. Well, actually, let me rephrase that. It's been kind of range bound since the Alzheimer's data came out. So you can see earnings popped, Alzheimer's dropped, and then it was kind of range bound for a while. It got knocked down today off a downgrade. Relatively speaking, though, it's a pretty tight range for a few months. And earnings may be the catalyst to bust it out of this consolidation. Really well-defined gap underneath. If it gets up through 355, really well-defined gap above. It had a beat and guide higher last quarter. So you're probably thinking numbers should be decent. This time around, we're looking for about a 22 or 23 point move, give or take. That's what the weekly straddle is. Tuesday after the close, two interesting names. So Illumina and Texas Instruments. Illumina has just been on a really fantastic run. Just beautiful, nice, really strong trend, like riding moving averages higher. And the numbers have really supported it. Just really fantastic, blowout report guides. So you can see recently, like the stock rolled over like a lot of like these momentum growth names, and this is really like maybe the first shot at a decent entrance in a while. So it moved 35 last quarter, had a big snap off the 50-day, dropped into it and snapped off. So it moved about 35 last quarter. So kind of made the options this quarter a little bit expensive. Looking for about 23 points, which outside of last quarter was kind of on the high end. The setup overall looks good for a rebound, right? Like, really strong trend, held moving average, looking for a rebound. Numbers have been good. But thinking that either longer dated call spread or maybe like a calendar spread could be a good way to minimize the expensive near-term options on this one. Texas Instruments, big chip stock. This is also Tuesday after the bell. So performance in this group has been rough, to say the least, right? So Texas Instruments at inline quarter back in July, and a few months later, so it was trading up above 115. A few months later, it's down below 100, right? It's hanging right at this really critical yearly support. You can see it's like really, really well defined, just underneath 100. I mean, like the way this group is acting, it's going to have to be a very, very strong print. Otherwise, a real material breakdown could be imminent here. And we've seen a lot of these chip stocks go from love to hated like real quick, and this thing looks in danger of really falling over. Yeah, so weekly straddle's about 5 points. That's what they're looking for in Texas Instruments. But this setup seems like the risk reward could be skewed more in favor of the bears, just because of the sector and this technical potential breakdown if it happens. Maybe you get a few dollar rally, but if this is bad, you could see like a pretty substantial breakdown. All right, Wednesday morning, got some big ones. You have Boeing, General Dynamics, ITW, and UPS. So basically another big industrial day. Of those few names, Boeing is the most important. It's the top weight of the Dow, and it's also been one of the best performers in the sector. So this is still hanging near the top of yearly resistance. You can see. It's pulled back underneath 370, but it's still close enough to it versus some of these other names which have really fallen apart. So Boeing's going to be a pretty good test of the risk appetite for the market, right? At least that's the way I'm looking at it. Straddle's priced in about 17 points, which is not crazy, but Boeing's had mixed performance the last couple quarters. Even though like the numbers have generally been beat and raise or beat and decent guidance, it hasn't really been rewarded much. Last quarter it sold off. So it's kind of a tough one to handicap, like you have like a top performing name that hasn't really been rewarded on earnings recently, although like the stock still looks okay. Generally though, it's been a little bit more tough recently to get rewarded on stocks that are at or near their 52-week highs, even if the numbers are bullish. So right now there's an open call spread that was a roll up. It was October 26, 410, 420. That was a roll up from a lower position. Whether we increase, increase the position or decrease the position, is probably going to be more of a game time decision on this one. To kind of get a feel of what the overall tape is kind of like, and see if maybe because we had a bigger industrial day earlier in that week or earlier next week. So we'll see how those perform, and Boeing will probably be more of a game time decision. After the close Wednesday, you got some heavy hitters in tech land. AMD Microsoft, NOW, and LVS and Whirlpool. So um, all of those are interesting. AMD. So we'll start with AMD. Rode this one for a while. Caught it from, well, we rode it basically all year. Caught the majority of this move, and then it pulled in. Um, so this one, we're probably gonna be on the sidelines for the actual earnings. And I really want to reload a longer term swing. It's pulled back nice, had like a 30, almost a 40% retracement. So I want to reload a longer term swing, but not really interested in paying the expensive. Implied volatility is pretty expensive for earnings. I'm looking for about a 4 point move. So I want to be in this one, but I'm thinking not through earnings. 4 points would be well past like the high of what it's moved on earnings. So it seems kind of pricey in that one, and a lot of it has to do with like the huge range it's been in over the last couple months. Microsoft, biggest name by far, market cap wise, and obviously going to have a really big impact on tech just in general. Priced in almost 6 points, Microsoft. Netflix had a good number but sold off, like you remember this week. So that's presents kind of a tough setup here for Microsoft, which more than, I mean, maybe Apple's like a little bit closer to its 52-week high, but um, it really hasn't budged much off its 52-week high. And when you think about it, also Microsoft has like kind of a history of not following through after good numbers. So you maybe get like a quick pop and then like a kind of like rolls over, loses steam. So that probably one we watch, maybe not one that we do anything with though. NOW, top software stock. This is going to impact the whole software group. So these software stocks tend to pop and drop with each other. This one has been a top performing one. They're looking for about 14 points on NOW. Las Vegas, look at that chart. What a beauty, huh? Casino's really been brutal. So if they're going to start turning around, I mean, this is going to have to be the start, right? Options, they're looking for about 3 points on LVS. And honestly, I mean, as bad as this chart has been, I mean, there's just no signs of buying. I mean, just lower lows, lower highs, very consistent trend selling. So, if they don't blow it out of the water, or if it's another disappointment, I mean, I know it's come a long way, but there still could be more downside until like you get to the low 50s. That's like the really significant area of support down here. Whirlpool. This is a consistent dog. Just underperformer. I mean, if you look it up in the dictionary, this would be the stock in it. Missed 7 out of the last 8 quarters. I mean, talk about consistent, right? Destroyed last quarter right here on tariff concerns, and basically hasn't had a bounce since. So pricing in 9 points. Got whacked for about 20-ish last quarter. Priced in at 9 points this quarter. Trades at a really, really low PE, but I mean it's just really tough not to expect some more downside on this one, considering it has a bad history of missing. Stock action looks terrible. I mean, there hasn't been any buyers in this one, just kind of continually leaking lower. And real estate suppliers, names that supply to the real estate industry, just have really performed very, very poorly. Thursday morning, it's going to be a biopharma morning. And you also have Twitter too. So you have Bristol Myers, Celgene, and Merck. And then also Twitter. So we'll get into Twitter in a second. But so pharma's been great. Bristol Myers and Merck, both in really nice uptrends. Bristol Myers, you can see, broke though a little bit. Actually, not a little bit, but it did break, which makes it a little bit more interesting, more so than Merck. Some drug data really took the wind out of this Bristol Myers, but it opened up the range, which is nice, right? So it was just like a real steady, like low volatility range, and then now the range has really expanded. I mean, it's had almost an 8-point drop in just a little under 2 weeks. It seems like it could be a good volatility candidate. versus Merck, which is like sitting right at 52-week high. Um, and also Merck has a little bit higher expectations probably. So could be a volatility play, Bristol Myers. Straddle's priced in at about 230, but I mean, just this week alone, it moved, almost 4.5. So 230 doesn't seem like a lot considering the recent ranges. Twitter, interesting tech name Thursday. So we were bullish into this quarter, and that obviously didn't go too well. But really, I mean, since those results, Twitter hasn't had a bounce. I mean, it had like a little bit of an oversold bump, but I mean, never even like retested the earnings day high. So just steadily like sliding. And then once it broke 30, I mean, it hasn't been able to get back above 30. So this one again, I mean, it seems like it's going to need a blowout report here, not to trade lower. It's just momentum. Momentum was fantastic, and then all of a sudden it swung dramatically. And now it's like hanging underneath. It's kind of like a key level 30, and coming off a kind of a negative report. Weekly options are pricing in about a 4-point move, so I think it actually could be a decent strangle candidate. So what I mean by that is, maybe like a shorter dated put position in case it flushes out, similar to last quarter where you get like a quick move, quick drop. Or maybe combine that with like a longer dated call position. The logic behind that being that if they do beat, maybe it starts to regain some momentum, and if they can beat, maybe get up into the mid 30s, and it hangs out for a bit, and then makes like a push into the gap. So like a rebound could kind of build as people get back into the name. So maybe like a shorter dated put position, longer dated call position. After the close Thursday, you're gonna have some real heavy hitters. This is Thursday is gonna be the key day of the week. Amazon, Google, Intel, Snap, Expedia, Western Digital, all of those names are Thursday after the close. So what I'm thinking at this point is I mean they're going to be, each of those names is kind of a tough setup in their own right. Why? Because Amazon and Google both have high expectations, but FANG just has been kind of out of favor. Like people are worried that like these things are sitting on big gains year to date. People are starting to sell. So Amazon, it's off its 52-week high, but it hasn't really been getting rewarded on bounces. Google, it was looking okay. It was like setting up for a rally, and then it fell apart. Now it's hanging out beneath the 200-day, so it's kind of tough. Expectations are high, but the stock is underneath the 200-day. Intel, Western Digital, right? Still in like really aggressive downtrends, and they just don't seem to get rewarded for any positive news. I mean, Intel is really not put in like what you consider like a V top, right? So these are just tough setups, like the numbers are okay, but it doesn't seem like people are in the mood to reward some of these tech names at the moment. Expedia, maybe the most interesting. So what I mean by that is that it's been a mover on earnings recently, pretty nice gap. So gap, 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 gap here. Weekly straddle is about 8.5 for Expedia, but just even not even factoring in these two major gap lowers, just like the recent two gap higher. I mean, it's moved about 13 on average, but only pricing at 8.5. So it seems like an interesting one. Maybe like a straddle or strangle, something along those lines. I mean, maybe the option seems a little bit underpriced on that. So Amazon, just to recap here, Amazon, they were looking for about a $130 move. Google, about $60 move. Intel is about $270. Snap, looking for about $1.10. Just brutal chart, right? $1.10 on that one. Western Digital, $375. So that's going to be a really big night. That's Thursday, and then Friday morning, it's going to be a breather. I mean, there's not really any big names of interest, at least on my radar. So that's why Thursday is going to even be like doubly important. I mean, like not only the names massive market caps really influence the tape, but also Friday, don't have really any other major reports. So I mean, how Thursday's numbers go is really going to dictate action on Friday. So a lot's going on. You can see there's a ton to look forward to. Sorry if that was a lot to process, but next week is just going to be crazy. So rest up, relax, enjoy the weekend, and get excited because earnings season is going to be in full swing next week. For all you guys that tuned in to the webinar last night, I'm glad to have you on board. We'll get the recap of that up for streaming soon. For all you guys that didn't, I'll try to get a link out there for you, so you can like check out the webinar we did. Please, 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 questions, comments, pass it along. I'd love to hear from you. You know, these videos I want to be helpful. So feedback from you guys is really critical to getting these videos in line with what you want to hear about. So have a great night, and I'll talk to you guys soon.